Montgomery from rogermontgomery.com. How are you guys going at the moment? Are you sitting on your hands like I've been telling my guys to do in the big stocks? And what have you been doing and playing?
Chasing 600 companies that make a profit. They tend to be, on average, more expensive than their intrinsic value, so it's rare that everything is cheap. So today is not unusual. There's a handful of things that are cheap, and as we answer the calls tonight, I have no doubt that we'll discover what they are. Okay, great. We have Tim from Perth on the line here.
Hello, how are you guys?
Hi. G'day. Hey, Tim.
Can you panel give me an idea, the technical view and fundamental of the stock called OBJ?
OBJ,
it's a business that's involved in a new method for delivering drugs, and there's a lot of businesses like this. It's really important, Tim, that if you own shares in this business, that you're confident this is going to be the dominant drug delivery technology, or it's going to be the company that's going to deliver that, pardon the pun. With new technology and fast-moving technology and technology where there could be someone in a garage inventing something nobody really knows, they're always very, very speculative investments. You don't really know which one's going to dominate. Again, until there's as Howard said, until there's a demonstrated track record of performance, it's almost impossible to value a business like this.
So for you, Roger, it's leave it alone, is it?
Yeah, well, at this stage, I think so.
You need more information, in other words.
Well, unless it starts earning money, you can't value it. So, it may be that Tim knows something about this particular technology that other people don't. He knows how it's going and whether or not there's an advantage of this technology over all the others, and this one's going to win. If he knows that, well, by all means, hang in there. But
how long does it take for you to develop a track record that you need for that information on how many years of history do you need? A year?
You can get it. You can do it in a year.
So let's review it in a year's time. Brad from Melbourne. And he's on the call. Brad, how are you?
Yeah, good, thanks, guys. Thanks for taking my call. I'm calling about a stock, Dyesol Limited, DYW. They're like a revolutionary sort of solar panel company. Just looking for a view on, I guess, fundamentally and technically how this stock is travelling at the moment. A business that has not only made losses every year, but increasing losses every year. And a business that has increased its shares on issue every year to cover that. So it's raising capital. It has no debt. Now, you might think that's a positive, but in actual fact, the fact that it has no debt is a reflection of the fact that banks aren't willing to lend to it. So that tells you that, again, another speculative company here. And if you have some information about its technology being dominant and winning the race, then you'd stick with it. But as a value investor, it's not something for me.
Jeanette, how are you?
I'm wonderful, thank you. I was just ringing up to inquire about Matrix. I purchased the stock at $5 and I was just wondering what's happened. It's gone down a fair bit at the moment. So I'd just like to see what you think it would happen.
Roger.
Jeanette, I've been a big fan of this company for quite some time. I've been talking about it for many months now. You asked what's happened because the share price has gone down. Well, probably nothing's happened other than people are trading the shares and the sellers have been willing to sell at lower prices. There's been no change to the fundamental performance of this business. Its outlook hasn't changed. Its prospects haven't changed. We haven't got a change in its economic performance. Nothing's changed. And I believe its economic value or its intrinsic value is significantly higher than the current price. And I have to confess I own it, so I've disclosed that. So nothing's changed. I'm a little bit concerned, Jeanette, that you're worried about short-term changes in price. If that is something that's an issue to you, then you really need to reassess whether or not you want to be involved in the stock market, because the prices go up and down every day, and sometimes it bears no reflection on the company at all.
Yeah, Roger, that's a very good point. I was actually looking at the chart, and if you got in at $5 and it's now $4.81, that's only 19 cents, a drop of 19 cents, which is a little bit of a drop in the ocean in a $5 stock. So Roger's point is well taken. Roger. Leo from Logan, how can we help you?
Evening, panel. I'd like your view on a stock, TSM, and I'd like Roger's intrinsic value for the stock as well, please.
Roger.
Again, I grade companies from A1 all the way down to C5. This gets an A3. Now, don't be worried about that. A3 is very, very good. and it has a very low probability of having any liquidity issues. I have a valuation that's slightly above $1, so it still appears to be cheap. And my only reason for not owning it is that I have exposure to businesses that are in this particular space already.
Robert, how are you?
Yeah, I've just got a question about the trading in a company, ERA, Energy Resources. I've had these for like the last maybe 6 months. I paid a lot more for them, around the $20 mark, unfortunately. But since they've fallen to about, well, maybe the $14, $15 mark, they've just gone sideways for like 4 or 5 months. But it's become apparent every day, and this is just a plaything of these algorithms. Like, if you have a look today, there were nearly 3,000 trades, were about $6 million in value, so I suppose the average trades were a couple of $1,000 bucks. But if you examine it more closely, there's at least a quarter of those 3,000 trades are under like 5 shares, 4 shares. I mean, what's that all about? What's the purpose of that other than to manipulate the share price?
Well, I don't think the goal is to manipulate the share price. I suspect that the goal is to make money from changes in the share price. You're right. These high-frequency trading systems and algorithmic trading systems are present in Australia now. As a value investor, that doesn't change what you're trying to do. You're trying to take advantage of disparities between price and value, and irrespective of whether there are short-term and high-frequency traders in the market or not, you still have the ability to actually do that. This is a business that produces uranium. Uranium is a commodity. Commodity prices will go up and commodity prices will go down. Long term, it's only an opinion, and I'm no good at forecasting these things, but long term I do believe that the uranium price will go up, and businesses like ERA are poised to take advantage of that. But therein lies the problem. Valuing a company that is a commodity business, that is a price taker rather than a price maker, is notoriously difficult, simply because you don't know what's going to happen to the commodity price, which ultimately drives the return on equity and, for me, the valuation of the company.
Roger, so is it worthwhile here, or you wait for some more information on this ERA?
No, look, I think it's a great business. I think it's a great business, but its revenue is determined by the price of uranium, and I'm no good at forecasting that.
Okay, cool. How can we help you tonight?
Oh, yes, good evening. And Roger, I've enjoyed reading your book. Just after valuation on Lynas Corp, LYC, and we talk about companies getting too expensive. I know they had a broker downgrade yesterday, and so I recommended a friend of mine take his profits. He bought at $1 and sold at $1.50, and we were happy with the 50% take until he asked me today why I wasn't in the 9% increase run. So just wondering how you see Lynas.
Well, as you know, Lynas's run has been largely the result of a determination by China to slow, if not ban, exports of rare earths to Japan. They're also playing games with exports to Europe and the United States. They're saying that they have to re-inspect the shipments that are sitting on the ports and so on and so forth. That's why this has gone up so high. I can give you a global perspective on this. There are fund managers in New York that I speak to, and some people in Europe as well, that wholeheartedly believe that Lynas is the company globally that is the closest to being cash flow positive from rare earth production, hence its popularity now. In fact, I know of a fund manager that bought some shares today. So this is a business that they believe is well positioned, but until we actually start seeing prices that are below intrinsic value, and we see intrinsic values rising over time, and I can at least expect that, this is very difficult. Now, I should say this: rare earths aren't rare. They're called rare earths, but there's actually plenty of them. The problem is that production, 90% of the globe's production comes out of China, so they're controlling the price of rare earths, and it's going to take some years before America comes back online and starts producing it again. And Australia has a lot of it as well. So, the story and the theme is good, but you still need the metrics with the company. You want to be able to buy it at a good price.